Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Well guys, today I have decided to shift to Great British Pound because on the Great British Pound we have really interesting setup. But in general, since we have started to see the price action right at the eve of the FOMC meeting on the gold, on the different currencies, on the Great British Pound, New Zealand dollar, Euro currency, any pair currently shows some action. And we have to note that, point that we should not treat this action as something that is triggered by some technical picture. This action that markets are now stand, this is just the preparation to Fed Reserve meeting, the Fed Reserve speech, and that is not the action that has been triggered by some technical issue, some technical pattern or something of that sort. That's why this action that we currently see on the market could be really short term, and the action could drastically change as Fed Reserve will announce their position on the economy, on the quantitative easing program and so on. Also, as we yesterday have found out that the gross domestic product release has been postponed on the 7th of November. So we will not get the number today. And in fact, the one event that we will get today is just the FOMC meeting. That's why, since probably you guys now see the decline on the euro currency, on the gold market, do not treat it as the action that we have expected to see due to our significant resistance. I think that this action will appear a bit later in the more or less calm situation when nothing will press on the market and market will stand on its own. Currently, I think that the current action is not, as I said, due to any technical issue. That is just investors try to minimize risk, try to prepare for speech of the Fed Reserve. That's why today I have decided to shift to the cable. Also, we will take the brief look at the New Zealand dollar since we are tracking it, and we have prepared the weekly research dedicated to the New Zealand dollar. That's why we just can't ignore it. So now let's start from the Great British Pound, because here I see a very intriguing setup in the short-term perspective that could shoot out today probably. Take a look at the weekly chart first. This will be some sort of the contracted weekly research, because we will start even from the weekly chart that we never do in daily updates. So the core of this setup now stands on the weekly picture. So take a look at that. This ABCD pattern, okay, has the 1618 extension that is just few pips higher than these previous tops. Okay, and market has not hit the 1618 extension for just approximately 40-50 pips. This consolidation probably was triggered by the hitting of the overbought condition on the weekly time frame. That's really a significant barrier, and market has to wait a bit, turn to some sideways action to correct, to exit from this uncomfortable situation where overbought is pressed on the market from the technical point of view. Now market is not at overbought, and markets, we know that markets very rare leaves behind significant targets. So the Great British Pound is not an exception. That's why from the probability standpoint, it's very significant probability that before any action will follow, market should test this 1618 extension. Whether market will reverse here to the downside or market will just continue move high, but probably this target should be hit. It stands at 62.96, so we could treat it as 163 even probably. Well, that is the foundation of our setup. Now let's shift to the daily time frame. We do not need slider predictor anymore. On the daily time frame chart, what we see? Let's contract a bit chart. So very intriguing action, right? So if I'll measure the extension here to the upside, we need probably only the nearest 127, and we'll draw triangles here. What we could get here? Here we could get the butterfly. Well, you guys should watch this setup through the view of possible Federal Reserve meeting. So that is the technical picture. Everybody knows, we probably understand, me and you, that anything could change because mostly the price action will be driven by the FOMC speech. But currently, this is really interesting setup and really fascinating, because that is very high probability setups. I like such sort of the setups that it's not quite obvious. So we do not see here the clear patterns. I think that not everything understand what is really going on here, since market hasn't hit this weekly target around 163 even. So that is the butterfly that could lead market to testing this target. Maybe this will be some kind of the ABCD to the upside. I do not know. But in general, the target of this butterfly stands slightly higher than weekly 1618, and particularly by this pattern, market could hit this target. But now we should estimate why market should reverse, or at least make an attempt to reverse to the upside. What's the reason for that? Why it should happen? Let's shift to the 4-hour time frame chart of the Great British Pound. What we see here? First of all, we see this ABCD pattern to the downside that could be treated, by the way, as the head and shoulders pattern. You could see it, right? Some sort of the shoulder, left shoulder, head, right shoulder, not very harmonic, but acceptable. Even if we do not treat it as the head and shoulders, let's take a look at this pattern. A, B, C, top. Market has hit 1618 ultimate extension and completes the target of the head and shoulders. Also, target of the head and shoulders by the classical approach measures as the distance between the head and neck line, counted down from the breakout. But very often these these targets very often coincide. But here you can see this target is a bit slightly more extended to the downside. Anyway, if we will take a look at this from the Napoli point of view, then we see that market stands at agreement in the 4-hour time frame chart. So that is 1618 ultimate extension of this ABCD pattern, and take a look, 618 support of that swing from that low to this high, 160.32. That is a very typical level for the butterflies. The 618, 768 fib supports very often when the right wing of the butterfly is starting to form. But since we have an agreement here, that's the level where upward action could start. How it will start is very difficult to say, but I can't exclude that this could be also some kind of the double repo buy or something of that sort. So we have 1, 2, 3, 4, 5, 6, 7 bars, although we need 8 bars. But maybe this could be the double ripple lookalike or something of that sort. So market, in fact, could turn to the upside from this area. And if this will happen, that will be just very intriguing and thrilling trade if market really will turn to the upside and will hit the target around 63, even 63.50. That's really not small move. It's about 2.5 hundreds of points, pips to the upside. So not bad move. Well, that's really interesting. At least this is something. This is something interesting really on the Great British Pound that is worth of our attention. I don't know, guys, whether you will trade it or not, because the current situation is a bit not as usual since we stand at the even eve of the FOMC. But that's really interesting. Well, now it's about New Zealand dollar. On a New Zealand dollar, as we have discussed, market has tested the neckline, our potential pattern, and next stage of this move should be move to the upside. As we have suggested, its thrust up is great, momentum is solid, so markets probably should show some deep retracement. Market, take a look, has burst this level, touched the 3.8 major support, not quite reached the oversold, because as you can see, Now our result stands slightly lower, but still it stands at the support and shows the return right back. On the 4-hour time frame chart of the New Zealand dollar, it looks really impressive. So take a look at this one. 100% extension target of this ABCD. But what is this? Dropping to the hourly chart. Let's look like the very nicely looking wash and rinse of this completion point of this ABCD pattern. This is at least something that you could use for if you're a scalp trader, although our major setup is to searching possibility to enter short. But if you're a scalp trader, you could use this pattern. It's looking nice bullish engulfing with weekly agreement, since this is ABCD, agrees with the 3/8 support on the daily time frame. And that is the bullish setup, currently short-term bullish setup, because market, if it really shows, will show some deep retracement to the upside, as we suggested, to the 83.75, 84.25 area. That's also not bad, not small move. In general, take a look. It stands in agreement with the setup on the Great British Pound. That's why I call you to not treat current declining on the euro currency, on the gold market, as the start move to the downside. That is just how investors are preparing to the FOMC meeting. Anything could change, and I suspect that some upward action, and maybe it will be even strong, could follow as we will stand close to the starting of the FOMC speech, Federal Reserve speech. So that is really a period of the great chances and the great risk. So that is not acceptable to anybody, to everybody. So this choice is up to you. I think that we will get a lot of chances to trade in a calm situation when we will finally get the patterns that we would like to see on the New Zealand dollar in particular. But just decide by yourself what you will do with this. Maybe you will stand flat, or maybe you will try to use one of these setups, because guys, for me these setups is really very interesting. They carry a lot of risk, but they also carry a lot of possibilities. So as a great British pound, as the New Zealand dollar looks very interesting.